the market master is here to tell us more about this. Let's welcome Gautam Shah, Associate Director and Technical Analyst at GM Financial. Good morning, Gautam. Thank you very much for joining us. Right color shirt, I must say today. But how deep can it get, you think, this market in terms of correction over the next month for the August contract itself?
Good morning, Vilata. Well, I guess this correction can get a little deep. Just to put things in perspective, since the beginning of this year, our markets have consistently made a series of higher tops and higher bottoms, which clearly, suggests that it is in an uptrend. And while this played out, the news flow that came in was always in sync with the price action, and therefore there was no real complaint. But as we got into the month of July, I think for the first time we had a few cracks on the charts. I think what has really happened in the last two and a half weeks is a topping out process for the markets, because since that breakout point of 6,300 and now having tested levels of 7,800, the market has seen a run-up of about 1,500 points without any major correction. Whatever correction that has happened in the last couple of months has really been time-bound. There has not really been any major price correction, which has made the setup quite unhealthy on the charts. And I think that the higher high that we saw last Friday at levels of 7,840, I think it could classify as a major top to this leg of the bull run. I mean, there are no doubts in our mind that this is a bull run that's going to continue for many months, potentially for many years. But I think the first phase of this leg up has got completed around that 7,840 number, because as the market tested that, you had a lot of disconnects on the charts. Firstly, if you look at the technical indicators, while the price action had made a higher high, the technical indicators had not done that. So that was the first indication that the markets are not having the kind of momentum that they have exhibited so well in the last 4 to 6 months. Apart from that, if you look at some of the popular sectors, the fact that the Bank Nifty and the Capital Goods Index, two really big index heavyweight sectors, they just refuse to participate. And in fact, these are two sectors which did not make a higher high last week. So that was another indication that the market is really lacking leadership, and therefore it might not sustain at levels beyond 7,800. Apart from that, I think the volume activity hasn't been great. The global news flow, as we have been talking in the last few weeks, hasn't been great. So all of these factors put together, we feel that the markets are clearly in for a short-term correction. I think 7,700 was an important level that we've been watching since early this week. If we manage to close below 7,700, which looks likely given the screen today, I think then in a very optimistic scenario, you could see the markets go down to a level of 7,450. But in a pessimistic scenario, in a bear case kind of a setup, I think you could even see the Nifty move down to a level of 7,100, 7,150. So I think we would be quite negative at this point, at least from a short-term perspective. And I think this is not the time to be really buying on dips, because I think the setup has changed for the worse, and this is actually a time to sell on rally.
Gautam, hi, good morning. I actually haven't heard you this bearish or cautious in a long time. So I'm going to probe on that point that you made further about the global markets. I know you track the S&P 500 and the Dow very closely. The S&P 500 is still above 1900 and the Dow is still above, 16,500. Do you get a sense that these two indices are also headed for lower levels? And if yes, what are the levels to watch on the downside?
Well, yes, I think U.S. market behavior will obviously be important for our markets. But then, given the local charts, I don't think it's going to be too much of a factor. However, I think U.S. markets themselves have had a very toppish kind of a scenario in the last couple of weeks. Just like the Indian markets, as the U.S. markets, the Dow and the S&P 500 made higher highs, and the S&P got so close to that level of 2,000, and yet it really could not clear that. I think what we really noticed was that the momentum was missing, and the U.S. markets were not really having any trigger to go majorly up or majorly down. But with what has happened in the last 3 trading sessions, there is a good chance that even those markets are likely to see a correction of about 5 to 10%. So you could see the Dow come down to levels of 15,800, 16,000. You could see the S&P 500 come down to about 1850, 1880. But I don't think that's really going to concern our markets too much, because if you look at the local setup, I think our markets have been very top heavy around 77, 7800, and there is this argument in this market that since this is a bull market, corrections can come and go and we will sail through a correction. I don't think that's a valid argument at all, because even in bull markets you can see strong corrections, large corrections of 10 to 12%. Just to give you an example, 2004, 2006, wherein the bull market was very much on, you had two lower circuits in the market while the indices and the markets were in a strong bull market. So that's the reason I believe that when corrections happen, they tend to be very sharp, they tend to be very, very deep, and they actually make the setup healthier for the next phase up. So broadly around 73, 7400, I think the risk reward will be justified to go long once again, but right now I think the markets needs to shed some weight.
Okay. Gautam, taking this correction argument forward, will the correction in the bank Nifty be steeper than the correction in the Nifty? What would be the weakest candidates as the Nifty makes its way, as you say, towards some lower supports?
Well, as I just mentioned, I think the sectors that did not make a higher high with the Nifty last week are the ones that are clearly the suspect. The Bank Nifty, if you remember, I think on May 16th, that was the election result day. After that day, the Bank Nifty has just underperformed for about 2 months. The Nifty has done well. Obviously, the price action has been great. There are so many mid caps and small caps that have done significantly, have seen significant appreciation. But the Bank Nifty has been a big underperformer, which is a big surprise, because in the last 3 years, whenever the Nifty has been led by the Bank Nifty, that is the time wherein the Nifty has actually sustained at higher levels. But this time, clearly, it is looking different, and that's the reason I believe that the Bank Nifty can actually come off to levels like 13,800 or 14,000, and it's only around those levels do the risk reward once again gets justified on the long side. I must say that the medium term and the long term setup for the banking space looks great, no doubt about that, and I think around 14,000, if you were to get the Bank Nifty, that will be a good time to enter that. Aside of that, I think capital goods, metals, I think are two spaces which have really completed a large leg up, and therefore they need to see a reasonable retracement of about 8 to 10%. That is under process, and I think with what has happened to L&T in the last couple of days, I think the capital goods index would be one of the better shorting candidates at this point of time.
Actually, that was going to be my next question. Where is the support for L&T lying? Does it lie at 1400, or is it even more?
Well, it can be much lower. You need to look at the kind of gains that some of these stocks have seen in the last few months. We've just got used to seeing some of these stocks go up every day, making higher highs every day. But at some point of time, they just had to correct. They just had to retrace, because any bull market and any stock in a bull market, if it does not see the healthy correction, it just collapses. And I think if you look at the setup for L&T and the capital goods index, I would say another 10 to 12% from current levels is quite likely. So I think one should not be in a hurry to really buy it at these levels.
Okay, let's change the mood a little bit then, Gautam. When we spoke to you in the month of April, you had said that the Nifty could go to 9,000 in the medium term. So if you do believe that in the short term, the market has a potential to go down to, 7,100, 7,300, whatever, in the longer term, would you still hold that 9,000 target intact, and what would the timeline be for that?
Well, yes, I think those targets are very much intact, but then, you have to really trade this market in phases. And I think currently, since we are quite uncomfortable with the setup, I think we are really concentrating on stocks wherein we can short, or we are trying to protect the, returns that we've made for our clients in the last few months. But yes, I think the medium term and the long term setup of the market continues to be very, very strong. I must say that, looking at the weekly and the monthly charts. And yes, eventually, I think towards the end of the year or by the first quarter of next year, you could see the Nifty trading closer to 9,000, and you could see the Bank Nifty at a level of 18,000. Now, today might not be the right day to give such targets, because we have a short-term negative view. But yes, for an investor who's missed out in the last couple of months, I think this correction would be a good opportunity.
Okay, on that note, actually, I wanted to ask you, what stocks would you advise for a long-term investor to buy into in the Bank Nifty, because you are bullish for the longer term?
Well, yes, I think the private sector banks have a very a strong setup if you really look at it from a 6 to 12-month perspective. But from a near-term perspective, clearly they are looking pretty weak. So there is a sort of a disconnect right now. You know, you really cannot take your long-term argument to buy at these levels. But apart from banking, I think if one has to play in this correction, I think pharma, FMCG and telecom. I think telecom is one space which is looking interesting after many years. And the kind of breakouts that we've seen in stocks like Bharti and Idea, I just get the feeling that there could be a phase in the next few months wherein this sector can surprise a lot of people. So I think it's a safe bet because it's almost negative beta, and I think that's a sector one can look at you know, while the markets go through their phase of correction.
Okay, Gautam, let me just expand what Sonia asked you. What will be the safe havens if the Nifty were to go even as deep as 7,300? Would it be the classic IT pharma?
Well, yes, it has to be the classic IT pharma, and I think you've seen that in the last 7 to 10 trading sessions. You know, pharma stocks have done extremely well. Lever testing 700, ITC, you know, doing its bit despite what happened on the budget day. So, you know, these are clearly indications that this is a sector which is likely to remain in focus. And I think pharma, FMCG, IT to a certain extent, I would be more comfortable with the mid-cap IT and not really the frontliners, because there I think the risk reward is not justified to go long at these levels, and maybe to a certain extent auto, because you know, auto is known to be an evergreen sector, and typically in corrections it does not go down as much. And I think stocks like Mahindra and Maruti I think still have phenomenal setup from a long-term perspective. So you know, these 3-4 sectors and adding to that telecom, I think would be my bets while the Nifty sees the consolidation maybe the entire August.
Okay, well, like we have been telling you, our money control boarders can also ask you questions, and we've got a question from Vivek. He's writing to us from Asansol. He wants to know if it is a good idea for investors to buy real estate stocks, especially HDIL.
Well, I wouldn't like to comment on a specific stock, but I think as a sector, it's also looking quite top-heavy on the charts right now. I think if you compare it since the breakout that took place in the month of May, I think the sector has seen substantial upside, and I would really like to recommend him to avoid the space for now, because typically whenever the markets go through a period of correction, it's the power stocks, it's the PSU stocks, it's the infrastructure stocks, reality stocks, you know, that go down first. So I think this is not the right time to buy into real estate. But yes, if you are a long-term investor, if you are looking to accumulate at lower levels, I think the better way would be to go through a mid-cap mutual fund, because there I think you will have substantial exposure to some of these stocks, and you know, you could make abnormal returns over the next 12 to 18 months.
Okay, just two more heavyweights that I want to ask you about, Gautam. You spoke about L&T. What about names like ONGC and HDFC? You know, both these stocks are up 30 to 35% since the start of the year. Do you expect any major correction in names like these?
Well, I don't think so, because I think these are not names that typically go down with the markets. They are known to be safe stocks. If you look at the oil and gas sector, I think stocks like ONGC and Reliance have broken out after years of consolidation. So I think there is significant upside in some of these stocks. So I think it's just better to just wait out this correction and look to buy some of these stocks on declines, because these are quality stocks, obviously fundamentally and technically. I think they will look lucrative after having corrected by about 5 to 10%. But I think for a long-term investor, it does make sense to buy them at lower levels.
Okay, well, Gautam, you know, you spoke about a range of sectors in the that will be the safe havens. If I were to ask you to pick the top 3 outperformers in the Nifty, or the top 5, which would they be?
Well, I think I would start with pharma, because I think some of these stocks have seen lovely breakouts in the last few weeks, and it seems that you know, some of these popular stocks which are listed in the F&O space can give you returns in excess of 10 to 15%, while the Nifty corrects by about 5 to 10%. So pharma looks excellent on the charts. Secondly, I think I would recommend telecom, where I think it's more of an aggressive bet, but I do believe, looking at the charts, that something really special is coming up in this space in the next few months. and I'll follow that up with FMCG, where I think lever would be my best bet, and I think their 700 is also just a number. I think this is a stock which can move up as much as 100-150 rupees even from current levels.
Okay, and just two other chart checks to complete the discussion. One, crude, how much lower does it get? And rupee, where does it head? If you track them.
Well, I think rupee has clearly got into that 59-61 kind of a range, so I really don't see too much depreciation for the rupee. If it were to break 61, it could depreciate to a level of 61.70, 61.80 at worst, but I really do not see significant depreciation there, and I strongly believe that levels of 67, 68, 69 that we saw last year, I think is the worst, and I think we're not going to see that maybe many months or for many years. Crude, I don't think it's of any importance, because I don't think that inter-market relationship between crude and the Indian markets have really worked very well in the last couple of months. So I think it's just going to remain range-bound. I don't have clear levels in mind, but I don't see too much upside or downside from current levels.
All right, Gautam, we'll leave it at that. Pleasure speaking with you. Thank you very much for joining us.